Hello there. Last week on the tariff news, copper price has spiked significantly from around $5 all the way up to nearly $6. That's a 20% spike in basically a day. A very significant price rally, but let's not get carried away here. Let's have a look at the copper price from the cycles perspective. Usually throughout the years, at least going back to the middle of 2018 and beyond, these copper cycles have lasted for around 137 days on average. The ongoing cycle has been going on for 93 days already, so we are quite a bit past the midpoint of an average cycle duration by 2. That's about 7 days into the midpoint, which is not necessarily the top of the cycle. Very often we see these cycles reaching a top quite late into the duration, as the previous cycle did, leaving it a very limited amount of time to drop significantly into a recognizable cycle low. That's exactly what happened with the previous cycle. That might actually happen with this cycle too, as copper price is probably overextended to the upside. There are several signs we are looking at when we are trying to identify where the cycle might be coming to some sort of a top. Of course, nobody does know the future, but whenever this distance from the 50-day moving average is a little bit too wide, whenever the price pokes above Bollinger Bands, notice above very wide Bollinger Bands, especially repeatedly, as we've seen over the last several weeks. And of course, as RSI, this is the 14-day RSI cycles. We are talking about cycles here, all the way from oversold at the beginning of the cycle all the way into overbought recently last week. That does clearly suggest that price is a little bit extended to the upside, especially compared to the prices in Europe. There is a bit of a disconnect over here, perhaps some arbitrage opportunities. That generally doesn't really bode well for the North American prices of copper. And yes, we might have another month or even a couple of months within the ongoing cycle over here. So as the 1st of August approaches, copper price might actually try to give us perhaps even a higher high above $6, but I wouldn't expect it to be the most likely scenario. Even if we do see a higher high, as it's going to be pretty late within the ongoing cycle, it's most likely going to be a fake breakout, sucking in a lot of the inexperienced traders before dropping down into the cycle low. In that case, we might see the cycle extending a little bit further than the usual duration of 137 days, but we'll have to see how it goes. I don't think it's the most likely scenario, as I've just mentioned. A more likely scenario is probably a decline down with, of course, some bounces on the way down into the cycle low, perhaps closer to the typical cycle duration. Cycle low perhaps somewhere in August or September. As for how low might copper price drop into that cycle low, well, one of the likely scenarios is retesting the support near the 50-day moving average, and of course by then 50-day moving average is going to rise. Also throwing in this Fibonacci retracement values. As I mentioned in a lot of my previous older videos, the most common retracement values that are hit into these cycle lows are usually either 38, 50% or 62% retracement. Somewhere between 38 and 50% retracement, that's where I would expect the 50-day moving average to get into by the end of the cycle. And that's also pretty close to this perhaps psychologically round number of $5. By the way, looking at the history of these rallies and drops down into the cycle low, let's say from this low over here, that's the change, a bit of a structural change in the market. That's in mid-2022. Since then, copper price has generally been respecting this parallel channel, except for the most recent tariff spike. So within this history, since the middle of 2022, average cycle rallies produce something about 22.6%, while average cycle drops brought the price down by just over 15%. And dropping down by 15% from $6 or close to $6 at this top last week does actually bring us to the price pretty close to $5. Again, a bit of a confluence of support levels over here based on the Fibonacci retracement numbers, based on where the 50-day moving average is probably gonna get to over the next month or couple of months. And we also see that it would generally align with the average size of these drops, at least since the middle of 2022. So regardless of whether we are going to see a further strengthening copper price to create this fake breakout above $6 or not, in either case, I don't think copper has potential to produce any significant gains within the remainder of this cycle, and perhaps caution is advised as a more likely scenario is coming down into the cycle low. After all, market sentiment is already quite hot. Looking at this history of market sentiment, copper optimism going all the way back down to the pandemic lows, we see that even these copper cycles lasting for 4 to 5 months are also forming these longer term cycles, which I call good times, as in, let's say, over here through the second part of 2020 and into the first part of 2022. That's when copper cycle lows are accompanied by this optimism index only dropping down to the 50s or slightly below that. After that, we have hard times. Good times are preceded by hard times, as in, let's say, second half of 2022 and all through the 2023 and into the beginning of 2024. That's when these copper cycle lows are accompanied by a copper optimism index dropping all the way down to the level of 30, that green line at the bottom of the chart, or even slightly below that. Over the last year or so, looks like copper has entered into good times again. But nevertheless, market is somewhat excited right now. Last week, the optimism index was slightly above 70. And yes, of course, we might see excitement go even further into the extremes, coming closer to the level of 80, as we saw in the middle of 2024. But as I've just mentioned, we see a bit of a overheating market over here, especially given that the European prices are somewhat lower with this arbitrage opportunity. I do expect general softness in copper prices, hence perhaps caution is advised into August and September. That brings us to seasonality, where we see that over the last 20-30 years, August and September as well as October usually produced negative results for copper price. And looking at the daily performance generally throughout the year, that's again based on the history of 20 to 30 years, we see that yes, there is usually some softness over the next several weeks. That would be into sort of first half of August. But perhaps copper seasonality going back for decades isn't as useful in the recent developments. So let's have a look at the copper seasonality since, let's say, 2016. The beginning of this long-term bull market in commodities. The dark arrows over here indicate all August months where we see red candles on the chart. This is a monthly chart. Blue arrows over here indicate green August months. And over the last 9 times, 6 out of 9 times, so 2/3 of the time, August was actually a red month. Again, even the more recent, historically speaking, recent seasonality going back to the beginning of this bull market in 2016 suggests that seasonality does hint at some sort of a caution, again, over the next couple of months. So that is my main message for this video. For much more details on a range of commodities, here's an example of a most recent uranium report. Make sure to join us at myfinanceteacher.org. Have a wonderful weekend. Bye-bye.